Good afternoon, everyone. I hope you're doing well. I wanted to show a very interesting chart, basically of the Australian banks, the Australian financial sector. We're looking at the S&P ASX 200 Financials Index. The code for that is XFJ, and that measures the collective performance of the Australian financials, the banks, insurance companies, but essentially, the big banks dominate this index. So we're essentially measuring the big banks and a couple other smaller banks and insurance companies and measuring the financial services industry, I guess, the big players in Australia, mostly the big banks. But this chart looks a little messy. So if we're looking at a 5 year chart here, and this may be a sign that the Australian real estate hyper bubble, maybe it's ready to flatten out. I'm not going to call for a crash because we know the Australian government is very stupid. They will do many stupid things to deliberately create inflation, to deliberately prop up this real estate hyper bubble, which causes the wealth inequality. Of course, it hurts people who are renting. It helps people who are upper middle class or upper class who have gone into massive debt to buy the real estate. They want to keep the interest rates low. But anyway, that's a rant for another time. But let's firstly look at what was going on from 2021 to 2023. If we turn this back, we could see a very clear resistance here around the 6,900 level. And you can see an inverse head. It's a little bit complex, but an inverse sort of head and shoulders formed there. You got the left shoulder, the head, the right shoulder, and of course there was a pop. And as always, we see a return to the scene of the crime. You break out, you come back to test, and then of course it's testing around that breakout level and riding this uptrend, riding. And then we could see from late 2024 until recently, like the end of 2025. So for a year there, we see the price making a higher high, but the momentum indicators making lower highs. So negative divergence. That's generally a sign that the uptrend is losing momentum. And we could see the first indication was a breakdown. And note the breakdown, just because I didn't have so many lines on this chart. Note the breakdown returned to the scene of the crime to test this previous high, this level here. We can see once it broke out of there, it came back to test it there again, and onward it went. Breaks down, comes to test it again. And then what does it do? This uptrend line that was intact, it returns to the scene of the crime again, testing the breakdown, testing the breakdown, testing this new resistance line there, this sort of wedge pattern, this rising wedge pattern. And now the chart's looking very messy, so I'm going to turn it off. So you can see the rising sort of wedge pattern there, another bearish signal on negative divergence, which we showed down here earlier, the breakdown. So now we've seen the breakdown. Now it finds support at a logical level here. We've got this sort of level here, although it hasn't quite tested that yet. So I would say it probably needs to come and test that. But you can see just a little, if we zoom into a 1 year chart, maybe you could say this is a little bit of a flagging pattern. It's sort of hard to draw a little bit there. It's probably early days. That could still pop out the top. But clearly we're seeing this rolling over. If we go back to the 5 year chart, we can see the big run in Aussie banks, and now we're just starting to see a bit of rollover, and maybe we're going to see a little bit more of that. We've got the negative divergence. We've got the fact that they hit an all-time record high price. If we go back to an all-time chart, that was the 2007 peak. Of course, that was a very significant level. You could see these levels here. This is where I drew the inverse head and shoulders. So this is a monthly chart now that goes back to the start of the century, or but that was where in this section here, this is where that inverse head and shoulders pattern that I initially showed was. You could see how key this resistance level was. I would say longer term, the Aussie banks need to come back probably to this level, and I mean I'm not saying that I want, and again, I cannot give investment advice in these videos, so this is not investment advice. I'm just telling you what I'm doing with my money or what I'm advising my clients privately, people who I can advise. I would be starting to buy some of this because I do think the government's going to prop everything up. But if we look over at an ETF that owns this index, you can see the dividend yield is only 3.68%. Let me just make sure that's coming up. Yeah, 3.68% is the dividend yield. That's not a very good yield to be buying these. But I mean, you can get more yield in, if we look over here on the right-hand side, you can see the interest rate on Australian government bonds. We see the 10-year Australian government bond pays 4.76% interest, and the 20 and 30-year bond pay over 5%. It's probably safer. And if you're looking for income, the fact that an Australian government bond is paying a higher dividend yield than, say, CBA or ANZ Bank is paying is a sign that they're probably very expensive. And of course, they've been propped up massively by this real estate hyper bubble. Australian banks, about 63% of their loan portfolio is to residential real estate. So interesting chart. If we go back to that XFJ chart, just very briefly, we've looked at it now for a little bit in this video. Lots of very interesting technicals there. If we just have one more quick look at the 1 year chart, we can see again this pattern of higher highs, a little bit of a wedge. You can see it's broken down from that. Again, we had even on the 1 year chart, we can see negative divergence on the momentum indicators as the price is making higher highs, momentum indicators making lower highs. This was a sign that the banks were getting ready to top, and then of course breakdown with a vengeance, and now a little return. Maybe it's going to be struggling at that level there. You can see the previous high from February last year. On the shorter term chart, it seems to be struggling a bit here. So maybe another downswing to come. Interesting times for the banks, for the Australian real estate market. I just thought that chart showed quite a lot of interesting technicals. And we can see one more here too. If we just clean the face there again, we can see the sell-off in early 2025. We can, I wouldn't necessarily draw that. That doesn't make too much sense. But what I would show is, again, just a little sign, positive divergence. So that's normally a buy signal. We can see the price hitting a lower low while the momentum indicator is making higher lows on the daily chart. And, if we zoom back a little bit, we can see that level there, pretty key, that little spike low. You can see that coincides with the previous highs there. So key levels being respected. There's nothing magical going on in these, with the Aussie banks. They're just, they're trading fairly technically, and we can use the charts as a guide to indicate when it might be time to allocate a little bit. For me and my clients at the moment, almost 0% allocation. I have bought very small amounts for a few clients that have large portfolios that can handle having some of this exposure in there. But right now, I would say not looking super bullish for the Australian real estate market. Again, that's not me calling for a crash. That's just me saying that, the upside potential is, I would say, quite limited relative to other asset classes. And of course, there is potential for, if we look at this longer term chart, this, this monthly candle chart, I would say there's very high potential for it to return to this key previous price level from the 2007 high. Didn't quite get there in 2015, 2017. But, again, these levels are more recent, so maybe this is where it needs to come to. And from where it's currently at, we could say a 20% decline in Aussie banks is quite a probable scenario. So interesting chart, just something to be aware of as we try to balance our portfolios through this mad world. Cheers.